Watch this.
International banking system
This is...
is an enigma. There are more than...
Guys,
The
I actually wonder. I think this is interesting.
international banking system is an enigma. There are more than 30,000 different banks worldwide, and they hold unbelievable amounts of assets. The top 10 banks alone account for roughly 25 trillion US dollars. Today, banking can seem very complex, but originally, the idea was to make life simpler.
Yeah. Wasn't that the beginning because people were robbing people because everybody had their money at home? So people decided to put money inside of safes so people wouldn't do, and people started doing bank robberies and shit. Guys, I feel like if I lived in the times of the cowboys, I would have tried being a bank robber for sure.
11th century Italy was the center of European trading. Merchants from all over the continent met to trade their goods, but there was one problem: too many currencies in circulation. In Pisa, merchants
Nick, come on. Oh, it's actually his birthday today. It's my brother's birthday. Ah, it's okay. It's okay. He's having a lot of fun playing games.
had to deal with 7 different types of coins and had to exchange their money constantly. This exchange business, which commonly took place outdoors on benches, is where we get the word bank from the word banco, Italian for bench. The dangers of traveling, counterfeit money, and the difficulty of getting a loan got people thinking.
Chat, guys, if you go on a date today or anytime soon, remember, fun fact, girl, did you know that the reason why it's called bank is because they used to trade a currency on benches, and in Italian, banco is bench.
It was time for a new business model. Pawnbrokers started to give credit to businessmen, while Genoese merchants developed cashless payments. Networks of banks spread all over Europe, handing out credit even to the church or European kings. What about today? In a nutshell, banks are in the risk management business. This is a simplified version of the way it works. People keep their money in banks and receive a small amount of interest. The bank takes this money and lends it out at much higher interest rates. It's a calculated risk because some of the lenders will default on their credit. This process is essential for our economic system because it provides resources for people to buy things like houses or for industry to expand their businesses and grow. So banks take funds that are unused by savers and turn them into funds society can use to do stuff.
Okay.
Other sources of income for banks include accepting saving deposits, the credit card business,
Well, of course this is scammers, dude. They're making money based on the fact that somebody's gonna fuck up. Guys, isn't that the whole base of it? Chat, is that they make money when somebody fucks up. If nobody fucked up, they'd make no money.
And selling currencies, custodian business, and
No. Well, they also invest the money that they have in the bank, so they make more money than they're giving back in the interest or whatever. But technically, let's say all credit cards are like that, okay?
and cash management services. The main problem with banks nowadays is that a lot of them have abandoned their traditional role as providers of long-term financial products in favor of short-term gains that carry much higher risks.
I'm sorry, I forgot interest rates aren't only when you fuck up, but also when you have to pay back. So if you let's say you borrow, let's say $1,000 at 25%. I get it. It's not only when you forget to pay, it's also overall.
Financial products in favor of short-term gains that carry much higher risks. During the financial boom, most major banks adopted financial constructs that were barely comprehensible and did their own trading in a bid to make fast money and earn their executives and traders millions in bonuses. This was nothing short of gambling and damaged whole economies and societies. Like back in 2008, when banks like Lehman Brothers gave credit to basically anyone who wanted to buy a house and thereby put the bank in an extremely dangerous risk position. This led to the collapse of the housing market in the US and parts of Europe, causing stock prices to plummet, which eventually led to a global banking crisis and one of the largest financial crises in history.
Jesus.
Hundreds of billions of dollars just evaporated. Millions of people lost their jobs and lots of money. Most of the world's major banks had to pay billions in fines, and bankers became some of the least trusted professionals. The US government and the European Union had to put together huge bailout packages to purchase bad assets and stop the banks from going bankrupt. New regulations were put into force to govern the banking business. Compulsory bank emergency funds were enforced to absorb shocks in the event of another financial crisis. But other pieces of tough new legislation were successfully blocked by the banking lobby. Today, other models of providing financing
Why the UK had to bail out the banks by buying some bullshit?
are gaining ground fast, like new investment banks that charge a yearly fee and do not get commissions on sales, thus providing the motivation to act in the best interests of their clients. Or credit unions, cooperative initiatives that were established in the 19th century to circumvent credit sharks. In a nutshell, they provide the same financial services as banks, but focus on shared value rather than profit maximization.
That looks like a pyramid scheme.
The goal is to help members create opportunities like starting small businesses, expanding farms, or building family homes while investing back into communities. They are controlled by their members, who also elect the board of directors democratically. Worldwide, credit union systems vary significantly, ranging from a handful of members to organizations worth several billion US dollars and hundreds of thousands of members.
Jesus,
the focus on benefits for their members impacts the risk credit unions are willing to take, which explains why credit unions, although also hurting, survived the last financial crisis way better than traditional banks. Not to forget the explosion of crowdfunding in recent years. Aside from making awesome video games possible, platforms arose that enable people to get loans from large groups of small investors, circumventing the bank as a middleman. But it also works for industry. Lots of new technology companies started out on Kickstarter or Indiegogo. The funding individual gets the satisfaction of being part of a bigger thing and can invest in ideas they believe in, while spreading the risk so widely that if the project fails, the damage is limited.
How often
and
does
last
that
but not
actually
least,
do?
Microcredits. Lots of very small loans, mostly handed out in developing countries that help people escape poverty. People who were previously unable to get access to the money they needed to start a business because they weren't deemed worth the time. Nowadays, the granting of microcredits has evolved into a multi-billion-dollar business. So banking might not be up your street, but the bank's role of providing funds to people and businesses is crucial for our society and has to be done. Who will do it and how it will be done in the future is up for us to decide, though.
That was interesting. I enjoyed that. I wish it was a bit, it explained more of the stuff that I don't know about, but it's whatever. It's whatever though.